Spend it, save, invest.
Ever wondered what happens when the risks of running a business collide with reality? Let's break it down. In the day-to-day operations of any business, risks are everywhere, from property damage to employee injuries to accidents. To protect yourself and your business, it is important that you take up insurance.
Business combined insurance is like an all-in-one safety net. So it's broad enough to cover many risks. And it's been developed by underwriters to form a framework that can address very many classes. In the day-to-day operations of businesses, there are various risks that are inherent. We could have property damage, we could have liability issues, we could have accidents to employees and the likes. So what business combined does is actually put together various classes of insurance into one policy. So we have fire, we have burglary, we have goods in transit, machinery breakdown, electronic equipment.
Now, you might be asking yourself, why is business insurance so important, especially here in Kenya?
There is a change in perception. Now I feel like business owners are waking up to the fact that risks can actually occur. And when risks occur, they actually hit hard. The thought that a risk may occur, but it may not occur to me, is a notion of the past.
Given that it's not just about taking a policy and moving on, what should a business owner consider before selecting the right insurance?
There are a number of factors to consider. First and foremost is the risk exposure. You look at your business holistically and think, what risks are inherent in my operations? What could I face? You also look at the value of your assets. How much am I worth losing? You also look at the safety of your employees in their day-to-day operations. If there was an incident, am I able to take care of that, or would I need a financial institution like an insurance company to actually take care of these risks? You look at the liability, and of course you look at the budget. If I am on a tight budget, then how do I approach this? That's where the issue of prioritization comes in. See? And we normally advise clients, at least you need a fire and burglary protection. Number two, you need a basic liability cover, like a public liability, and you need a cover at least for your employees, which is a WIBA or GPA cover.
But how much are we actually talking about here, and what's the price tag for business insurance?
There is no constant or singular premium or cost that I can mention that covers this insurance. The cost is dependent on the risks that we've put on board. It's dependent on the exposure. It's dependent on a number of things. It's dependent on the size of the company. Mkulima mdogo may have very few assets, so their premium compared to a large manufacturing plant somewhere in Thika would vary. But for starters, the basic premium ranges between 10,000, that's the base, and then it goes upwards towards millions, depending on the assets you have.
Often than not, business owners think insurance is just another expense. What are other common misconceptions people have about insurance?
One of them is the thought that insurance is for the big boys in the industry. That's a misconception that people have that is actually false, because risk is in everything we do, and I think everyone needs to have a level of protection. The thought that because I've been lucky before, I will always be lucky. Because there are floods and I've never had an incident, then luck will be on my side. But I normally say luck is never a strategy. And the other one we've mentioned, it's the perception that insurance companies are cons. They take your premium, make money, and don't pay claims. That's a misconception that people have that is actually false, because risk is in everything we do, and I think everyone needs to have a level of protection, and insurance is one of the most correct ways.